Good morning, traders. It is 8 a.m. Chicago time on Monday, the 18th of April, 2022. Happy Easter to those who observe it. First things first, can I get a mic check? I'm starting from home today, just making sure that I'm not blowing out your headphones or speakers. This is episode number 2214. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the first thing we should note is that Europe, Hong Kong, and Australia, among other markets, are closed. So the volume is relatively light. As a result, and I'm comparing it to the last few sessions, which had over 200,000 contracts at this point of the day in the S&P. This morning we had Bank of America, Charles Schwab, Bank of New York, Synchrony, among others, reporting. Bank of America being the Goliath in the bunch, with revenues coming in at $23,334 million. Bank of America announced an 80-cent earning per share Q1 versus 74 cents expected. Schwab, which is much smaller, I don't see their numbers here, but it's estimated at 84 cents and 4.83 billion. Those are the two key ones. Again, we have Bank of New York, Synchrony, JB Hunt after the close, which is a transportation company. The others are sub-billion-dollar stocks, so I don't really track them. The risk posture is mixed on the risk office side, and currently, last night China announced its Q1 GDP results, which were very strong, and so that's carrying a little bit into the session. But we did sell off right off the get-go. China came in a year-on-year Q1 came in at 4.8% versus the forecast of 4.2%. Industrial production year-on-year from March. So the GDP was for Q1, and the industrial production was for last month, came in at 5% versus 4.2% expected. So relatively strong. Today, we get the NAHB Housing Market Index out of the U.S., expecting 77. Fed's Bullard at 4 p.m., and then the Reserve Bank of Australia, meeting minutes at 9:30 p.m. That's what's on deck for today. Just looking across the board, crude remains in a high flag. It looks like it really wants to attack 110 again. Remember, the high recently was 130.5, and it looks poised to do so. Still some supply issues for crude. Gold remaining ticking here at the 2,000 mark, pretty strong, and so is silver. Crypto has been soft. We've come a fair amount off of the high we just put in, and that's really what's on deck. The S&P 118,000 contracts, 99% of the inventory is short, meaning 99% of the volume traded was traded below the settlement price. Range is 34.5 points, relatively tight, a wider range than the most common amount of 23.5, but really nothing to descript here. I'm coming into today with Europe being in a holiday, not much anticipated on the calendar, unless Bullard comes out and says something outrageous. I'm expecting the same posture that I had last night. Just to read off some of my notes in the Head Trader channel at Convergent Trading last night for my homework, I said that the way ES closed on Thursday And the Monday through Thursday balance is saying that the auction has been very unsuccessful at capturing and holding the area's MC point of control of 4460 or higher. We'll look at that in a minute. Basically, it is weak unless very unexpected news hits the tape this coming week. Then I would expect with pretty high confidence this was put in. I talked about this, or I wrote this at about 2:30 Chicago time yesterday afternoon. I would expect with pretty high confidence a test of 43.34. 43.34 below a breach test below 42.95 to give buyers a chance to scoop up some bargains. So based on how we acted last week, I'm very, very confident. I was very confident that we would break below last week's low, which was at 43.75 or so. And I'm very confident that we're likely to test this 43.34 area. If we don't see motivated buyers at those levels down at the 43.34, 42.95, then we're looking at clearing 42.50 and getting into 42.21, which brings us into this big balance area between 42.85 and 41.50. We'll cover that in a minute. I don't have a chart up, but it's clear that the market is really slumping. So let's take a look at what I was talking about here for a minute. Well, let's start with the TPO chart. So you could see that, we made this peak. Let's go up. We made this peak, 46.30-ish, and then we petered out and we rolled over. We made these kind of bearish ascending flags and kept breaking them. Bearish ascending flag, break, and now we have this kind of a square balance that we're in down here. And to me, this just looked like the buyers are not able to perform the way they did on the way up over here. So the expectation is it's likely to give that up and head to our 43.34. That's the MC point of control in this area. Very prominent high volume node here. This is where I'm expecting the market to go to test balance. And that hypothesis hasn't changed. Last week, since it could not hold the MC point of control, 44.60, we tested to 67, but mainly stayed below. You can see this is Monday, Tuesday, Wednesday, Thursday. We stayed below that 60 area. To me, this is awfully weak. And buyers are just not able to hold their own. And so prices, that tells me that prices are not low enough yet. And so I expect prices to drop. Now we did overnight. We went to 43.55.50, highlighted in green here in the scale on Edge Pro X. But that's not enough. We went to 43.55.50. We bounced back up into Friday's low, but Friday had just such a terrible low. I mean, if you look at this profile right here, Friday, multi-distribution, look at this low. This is an awful low. This low is not likely to stand. That's one piece. And then the second piece is, look at what it's done. It's kind of test, and just keeps coming back. And as long as it keeps coming back to these prices, that low, Thursday, it's Monday, so I think it's Friday all the time. Apologize for the confusion. There was no trading on Friday. All markets were closed. So as long as we keep testing these lows, we are likely to break, and we did. And here we are trying to get back towards them. So this is a very clear resistance area right down here. We'll see how the market behaves as it comes back up. And to me, this is, still we have a pretty bad low here. There's zero excess, and just a quick refresher about the types of lows we're talking about. The normal distribution, the theoretical distribution of volume should look like this. Remember from your statistics class, and the first standard deviation, and then the mid and the average would happen to be the same price, and then you'd have one sigma, which we call value in here. If the profile looks like this is called, and you guessed it, a P-shaped profile. This is a market that, especially if the market opens down here and closes down here, this is a market that is rejecting, very clearly rejecting the prices down below and is accepting prices up high. This is a short covering profile. We have a squeeze, a short squeeze, and we still have a weak low. So we don't have an excess. See how the volume tapers at the top and at the bottom. It dries up. There's just no interest at those extremes. But then on a P-shaped profile, you generally don't have that, which means the next day it is likely to continue higher. Okay, and then what these profiles have done, so if we look at the overnight here, you have a very blunt low, right? This has a bit of a taper in it. We could see like a little rejection there, so that's relatively strong. And this is a good taper right here. This opened near the low and it ran away, and we have a pretty decent taper on the low in the volume profile. What does Friday look like to you at the low? It's quite fat, right? It's quite fat, which means a lot transacted in this area, which means that prices got accepted into the close, which means that it's pretty weak on a trend down day, on a day that rejected high prices and just sold off. To have a weak low means it is very likely to continue lower. The market did not find buyers, and it got interrupted by the fact that it was closed. And so when it resumes, it generally continues. Like if you're holding short into this type of low, it's generally advisable to just hold that short. If your plan is such that you would trade, hold a position through the close. My plan is I don't, because I value my sleep and I don't want to sit there and watch a position all night. So that's the this is how Friday closed. It pushed, and it ended up with this high volume at the low. And if we look at the relative delta on Friday, so this is the relative delta, the blue and red bars. The orange is small lots. These are less than 10 lot trades. The white are large lots. These are 10 inclusive, 10 lots to 99 lots. And the yellow are 100 lots or greater. And you could see that a lot of times the small lots are really what push a lot of the volume because of icebergs and because the trades are so chopped up. But look at how this delta performed. So if I bring it in a little bit to show you the day, you could see how the delta performed. I mean, we came into the overnight session, bought up into the cash open right here. It's 8:30 Chicago time. We bought into the cash open, and then from there, slam we go. Somebody just hammering on this thing. And from there, never really looked back. This is an all sessions chart. I can, of course, switch it by removing show extended data here. And you could see that it just closed. The delta closed near lows. This is another indication of weakness coming into the close, which we expect to carry over. And of course, the overnight session has been quite lazy on a relative to what happened in RTH from Friday. RTH from Friday is right here. But overall, the delta is still negative. This is using MBO data on Rhythmic. It's very accurate tick data. And overall, we're coming into a weakish session despite the rally that occurred in the overnight session to bring prices from 43.55 to 43.82. There's just not very much lifting on the way up, right? So we'll see how today kind of carries over. But to me, it just doesn't, it's looking quite weak. We are below the VWAP. Remember, we finished last month well above our VWAP, and here we are revisiting the VWAP from last month. So if I continue, if I didn't reset this VWAP from last month to this, we would have tagged it on Friday. Same with the Dow over here, same with the NASDAQ, same with, well, the Russell's always doing its own thing. The Russell's actually testing it from below. So overall, I'm just seeing continued weakness across the complex, the indices, and I'm expecting that this week would bring us to that composite point of control, which I want to show you. So let me flip over to this screen here. Remember, it's Monday, so it's a bit of an overview day. So this is the composite chart. This chart, it represents a daily bar, RTH only, which in my time, Chicago time, 8:30 to 3 p.m. And each bar represents 1 day of trading. And what we had last week is this. Look at that. That is some incredible balance. Look at the profile. I mean, this is some textbook stuff here. Textbook profile, Gaussian profile, 44.29, could not hold the 44.60, which is the composite point of control in this area. And we finished, look at how weak we finished. We finished near the lows of this composite. So to me, 44.29 is immediate resistance coming into this week. And it has broken to the downside. 44.60, this black line, is the composite point of control. It's the point of control of this whole area. And you could see that we're breaking down now into the stem of this composite. And this composite is made up, the bracket for the composites right there. It's the little orange thing. And it starts at the last swing low, 41.52. So I'm charting all the volume quite accurately that has occurred since the last low. And we could see that balance was accepted up here. And now we're moving, we're initiating away from balance. This is initiating away from balance into the composite point of control. And this composite goes back to 2007. And that's the point of control for it, 43.34. 50. And so this is a gigantic area, this 43.34.50. It is essentially the most accepted price for a while. And we're likely heading back in there. And the expectation is we come in here and we really whip from day to day. We just whip around it for a while before starting to break down. And if we clear, as you can see here, this low volume node at 42.50, then the next target is where? The high volume node, because that's what that's what the auction does. Slows down, consolidates up here, then slides, quickly slips through the bottom, accelerates, then slows down at the peak, slow down, peak, slow down, peak, slow down, peak, slow down. And that happens to be the 41.52, which to me looks awfully vulnerable at the moment. Okay, unless we turn things around and we start moving above 42, above 42, 44.29, and get into the 60, hold it, and start walking away from that 60, then it's not likely to hold. And you can see the comparative volume here. There's nothing about this profile that is skewed. This is how much volume occurred up here. This is how much volume occurred down here. This could turn into a double distribution profile down here. And there's a lot of stuff to fill in. Remember that rally, that crazy rally? Well, I talked about how that had poor structure a month ago. And that's what we're seeing. We're seeing the market coming back and trading and filling in that poor structure. And it's likely to do so all the way down into 42.50. That's not it's not trading advice. I'm not telling you to get short, mortgage your home, or, take equity out of your home and get short and become a billionaire. I'm just simply saying that the market is just screaming that it's not able to hold on to these areas or regain the areas above, which it has to do in order to keep squeezing the shorts out. Okay. So this is, that's what I wanted to cover. I don't really have much to say about today. Let's take these off. Let's look at the overnight session. Look at that profile. It's essentially balanced. It's a double distribution profile, but it's really essentially balanced. It's been moving up. The low is not very firm. I'm not seeing a very, I'm not seeing much of a taper on the low, and it's kind of walking itself up. I'm expecting we are opening out of range. We're opening out of balance today. I'm expecting a relatively quiet and choppy morning session. So try not to overcommit, try to be patient, try to read objectively what the market is saying. I believe that it is likely to not give us very much to work with today. Let's take a look at what's expected for today. Let me pop my levels back on. My buttons are all backwards here. So the primary scenario, note that the magnet is now 42.29. That's the most immediate high volume attractive area in this region. The over under level is 44.14, which is has been a battle area. Take a look at this 44.14. Look at that. Low volume node, low volume node, low volume node in here, somewhat of a low volume node over here. It's been an over underline this whole last week, so it's the over underline for the session today. The support or target down below is, you guessed it, 34, right? That's the key support. So you have the key over under and the key magnet. And the expectation is we're opening out of range. We're opening right against that 75 from a few days ago, from last Tuesday. Open auction, expecting a quiet open auction, expecting it to make a response. I'm expecting it to get back into the range, to stall, fall back out, and then to start rotating down towards its own overnight point of control, fill in the 64 single, and then hold steady here. I'm really not jonesing for to sell off today. With Europe being closed and a lot of bank desks being off, I'm not sure if we'll go directionally, but if we do, then all shorts are aiming for 43.34. Like, I haven't said that enough. The secondary is an open auction that tests down, gets down into the overnight point of control at 63, is unable to continue, and we get a bit of a push that is refuted. That's what I'd like to see. I'd like to see an impulse up, and then we get back into the range. Now we've got something where we can squeeze back into the 4,400 to the 4402, 4405, and potentially to the 14. So the 14 gets back into play once we get inside the range, and it's likely to top out there. That's a lot of room to cover. It's about 60 points. And the current, if you look at the pre-market summary sheet, the range right now is, 54 for the 56 for statistical range is 56 for the ES. So this will be just tested the low all the way to the 14. If not, we're getting back into the 92, 90, 92, where we find sellers and then we drop into towards the low. If not, then we get into 34. That's the plan for today. Good luck, and I'll catch you tomorrow morning. And tomorrow morning is supposed to be a normal market day. Take care.